Good morning, Chris Beach, and welcome to Charting the Markets on IG Live. And after signs of recovery in risk appetite this morning, we've seen that really wilt and hopes of rebound. You saw a better session than overnight in Asian markets. China's premier talking up the chances of stimulus or support for the economy later in the year, and that gave Asian markets a lift. And then we thought that would continue into Europe. We did have a higher open in Europe after yesterday, but then it did wilt, essentially, really in the summer heat. Stocks rebounded from their lows yesterday, particularly the FTSE and the Dow, but overall, it's still a bit of a lackluster session, I think, really. Markets just wondering where the next big catalyst will come from. It's not been a huge weekend of a huge day of news, rather. Of course, you had the events in Russia over the weekend, but nothing much to drive markets at the moment. This morning, you have had a speech from the head of the ECB, Christine Lagarde, essentially warning that more hawkish policy would be needed, because inflation is not responding. And with Canadian CPI today, I think the theme remains inflation and what central banks will do to counter that. So starting with the indices, beginning with the FTSE 100 currently trading at 74.50, and you can see really that yesterday this index rebounded off the 7400 area and seemed like it was trying to produce some kind of low. It was back then, putting it back briefly above that late May, early June low around 74.50. And we did, as you can see from the candle, push higher in the early part of the session, the very early part of the cash session. But that has wilted as time has gone on, and we're back lower this morning. Not hugely, but it's interesting if you look at the price action on the hourly chart that you then had this weakness coming back in again. It was the rally from Monday's lows, very beginning of Monday's session, unsurprisingly perhaps with news from Russia, and then it rallied all the way through the day and is stalled at 7,500. So another lower high on the hourly chart here, continuing this downward progression of the last week or so, really, for the index. So it could be that we see another attempt to head down to 7,400, down to 7,400, and potentially from there, of course, the March lows around 7,300 come into view. But the downward move really from mid-April still firmly intact here from 79.30 or so. And you could, even a recovery all the way back to 7,600 would still put us again up against trendline resistance from those highs that we saw in the second half of April. Trendline resistance tested in late May and indeed in the middle of June with no sign of it breaking just yet. So that's and again an interesting development there. The sellers have regained control here after, not surprisingly, a rebound from overextended lows yesterday, but downtrend still firmly in place on that hourly chart. The DAX as well. Now this one, of course, still firmly in an uptrend. There's FTSE 100 firmly isn't, I think it has to be said, but we've crucially broken below rising trendline support from late December. That we broke that on Friday, so that's an interesting development. Also find ourselves operating below the 50-day moving average. Opening below the 50-day moving average here for the first time since the end of May, and indeed the first time we've opened and then closed below the 50-day moving average since the second half of March. So maybe things are shaping up for a bit more of a substantive correction, certainly in European markets, which we have done so well in so far this year. I think it's interesting to note that really, that finally the sellers have gained some traction here. We're still only around the lows of late May, so it's not even it's just about a month low, 4-week low, really, call it that. But it is perhaps time that this turned into something more serious. And that's always a possibility we should be alive to, that the uptrend still firmly intact, even if, of course, if we have lost trendline support and the 50-day moving average. So if it does go below 15,700, if you remember back in April and May, such a big area of support, and previously, of course, resistance as well. So if that is broken, that's going to be the next big thing. That's a bit of a worry that you've got this yawning gap between the two, and does allow plenty of space for the bears to push this one down in the medium term. Of course, summer, historically, it's never a great time for markets. It's not really that we see huge corrections every summer, but usually markets tend to struggle over the course of July and August. And that's perhaps something that will come into play on the DAX here, really. And if we look at the Dow, hopes of recovery, again, like the FTSE 100, it bounced off its lows yesterday, rebounded off the 50-day moving average, and then just unable to push higher once again. That's interesting. I think the price action perspective is always the key here. And it's the fact that, okay, yes, it rebounded from yesterday's lows. Maybe the buyers thought their time had come with just the end of the month. But certainly gains have faltered this morning around the 33,800 level. And perhaps now we could see it continue, I think. And that's always the assumption, really, that you've got another higher low really coming through here. And that until that really changes substantially, I think it does sort of bode ill to the market in the short term. We couldn't hold above the 50-hour moving average. And that's always the kind of thing you need to see in a rebound. Prices have to recover those moving averages and stay above them. It sounds obvious, really, but it's just if the price is stuck below the 50-hour moving average, it's kind of a sign that it's not really got the strength to move higher, and thus the sellers do arguably just about hold the edge on this one. FX markets have seen the euro rally once again, continuing to claw its way higher from Friday's lows. That's, I think, another thing that's probably putting some pressure on European equity markets. Christine Lagarde, head of the ECB, really calling for more rate hikes, saying that inflation still needs to be brought under control. They're now looking at other pricing indicators, such as the labour market, which I think shows how worried they are about inflation becoming entrenched. So it's a recovery here for the euro against the dollar, back above 109. Continuing on from where it was on Friday, on Friday certainly. And again, it's doing what indices couldn't do, really. It's rallied from Friday's low down at 108.50 or so, and has held above the 50-hour moving average and is now pushed on once again. So then the short term, we're looking for a continued push towards 111 and the highest levels for euro dollar we saw there since a number of months, really. It's notable, really, that was the highest level it reached since second half of May, really, euro dollar. And then beyond that, 111 becomes the next area to watch for. The continuation of this rally seems to be there. It's been a brief pullback of 2 days. The buyers coming back in again to defend this. MACD, of course, didn't even turn negative. So that's another sign maybe that the buyers remain firmly in control here. Of course, US durable goods on the data docket for this afternoon. So there's always the potential there for maybe something to drive the dollar a bit higher. But overall, it looks like the markets are convinced that the ECB's commitment to fighting inflation and the need for more rate hikes there is stronger than that in the US, despite the hawkish talk from Jerome Powell. Of course, we get a Powell speech this week as well, the ECB forum in Sintra in Portugal. That's where you get a Powell speech as well, so it's something to watch out for, really. If we turn to the pound against the dollar here, it's just not really unable to recover. A similar price action in some ways to indices, trying to bounce this morning and not succeeding. So back towards 127.20, potentially continuing this downward move. So the sellers have been keen to jump on any signs of strength intraday. With Thursday's, the fact that the Bank of England decision saw that rally and then it struggled and failed to move higher sends, I think, a message here that really there are concerns now that while the Bank of England is determined to keep hiking rates, it will have a poor effect on the UK economy. Not really a bad argument to make. So I think recession concerns really hobbling the pound at the moment. The key thing to watch for is if it gets back below these early May highs around 126.70. Because if that goes, you've got much more chance for some kind of substantial correction down towards the 50-day moving average, or even lower in the shorter term, down towards 124. That's the key thing, I think, to bear in mind here. And then finally, looking at dollar yen, a lot of talk about action from the Bank of Japan really driving this one. I think you've got to be careful that if you are long dollar yen, it is, I think, something you need to be aware of, that the Bank of Japan and other Japanese authorities increasingly talking about the strength of the dollar and the weakness of the yen, and they might need to do something about that. So it's the kind of talking about something that is the red flag and then raises the risk that something else might happen in the meantime. So do bear that one in mind if you are long dollar yen, or certainly if you're contemplating going long dollar yen, really, because that's the risk of these elevated levels, that you get a substantial pullback here that might see the price go back below 140. But at the moment, the buyer's firmly in charge. 4 or 5 days of gains, no sign of that changing, really. The buyers again stepping in on any sign of weakness, but just bear that one in mind. I think really that the overall trend is still there, but it's definitely one of those markets where fundamental news could come in and change the view dramatically and very, very quickly if there are signs of some kind of intervention from the Ministry of Finance in Tokyo. And then finally, turning to commodity markets, gold once again struggling, unable to move back above 1930. I think is an interesting sign that maybe the sellers really have got control of this one and a more substantial correction down towards 1856, the 200-day moving average, could be in the offing here, which is notable that it would still leave the uptrend more or less intact, because that would still be a higher low above the February and March low, but it would certainly make life a lot more difficult to argue that gold had more upside ahead of it. So the fact that we can't get back above 1930, excuse me, is a bit of a negative sign, really. Unless that changes, then if you get back above that and back above 1950, then we can argue that we've both recovered support and moved back above trendline resistance. So that's the key thing to watch, I think, at this point in time. There's the next big area to watch. Back above 1950 could provide a bit of a resumption of the bullish view, but for the moment it does look like the sellers are in charge, and it does look as if perhaps we've got a bit more downside coming through here. Let's go to the hourly chart. You can just see there really that attempts at a rally have faltered the last couple of sessions, 1930, and then even this morning an even weaker one, really. So not much joy for the buyers. And finally, turning to US crude, there were signs, of course, over the weekend in Russia. There were concerns that would be a disruption to supply, and that might then cause tightness in the rest of the market and then drive the price higher. But with the calming of tensions for the time being in Russia, that has really given a boost to the sellers once again. And I think as recession fears mount around the globe, as talk of higher inflation and higher interest rates comes back, it's really hitting crude prices once again. So the next big thing to watch for, 67, 60 or so, and big support zone around those June and late May lows, back below that down towards 64. And it continues to be a bearish view for crude oil prices, really. And I keep saying this, unless and until we get back above the 100-day moving average, at least it remains a broadly bearish view. And with price action still firmly below, of course, 74.30 and this zone of resistance, there's not much chance of buyers really getting control here. Big consolidation, but it might be that after months of sideways movement, that crude is about to break lower once again. So that, I think, is something to bear in mind, particularly if, as I say, recession fears and then potential hits to oil demand really begin to bite. Looking at the rest of the day, Canadian CPI 130, also US durable goods at the same time are the main events of the session. So potentially, of course, the former, if you get a strong CPI print in Canada, I think that might cause some fresh jitters across equity markets as well, really, that inflation is becoming even more entrenched across the global economy. We're expecting a bit of a mixed open for the Dow, really, currently expecting it just to open around about 34,740. So that's again slightly down on where we were yesterday. So an overall negative tone seems to be returning to equity markets. But that's it for me. Thank you for joining us, and we will see you again tomorrow at 10:30.